Hey everyone, it's Matt Willoughby here, and in this video we're just going to run through your borrowing summary. This is an example of, let's call them John and Mary, and they're looking at getting into their first home. So first things first, they've mentioned in their online profile that they're obviously a couple and they have two dependents. And they must be at school age because they haven't actually mentioned any daycare fees or expenses to that effect. No education costs, so they're not at private schooling. So John and Mary, two dependents, both at school, no costs around that. Very modest expenditure every month for their insurances. The rates, this is something we've actually plugged in ourselves. Yes, at the moment, John and Mary are not paying rates. They're not property owners, but moving forward they will. Approximately for a first home in their price bracket will be about $2,800 per year, which works out to be $233 a month. They're not looking at unit title or apartments, so typically there won't be a body corporate involved. And then not child support, this is a silly example, but this is just other miscellaneous. This is more like alcohol, cigarettes, takeaways. Takeaways is often the big one, things like that. Now, what's going on here? We're actually doing a net income calculator. It's all happening in the background. We've got your income here. There's actually a tax calculation, KiwiSaver deductions, and it's just figuring out, it's asking the question, what's your monthly net household income? And moving forward, we're actually proposing two times boarders or flatmates that they've mentioned in the application, paying $200 per week each. So this is a weekly figure, $200 times two boarders. So that's the figure. Now, really simple. We're not even talking deposit. We're not talking equity at this stage. We're just talking serviceability. How much of a mortgage are they likely to be able to get their hands on? And the answer is this figure here, depending on their deposit requirements. You do need a bit of a helping hand to figure out what the minimum UMI, uncommitted monthly income thresholds are, because it is very much dependent on how much of a deposit you have. If you have 20% deposit, the minimum uncommitted monthly income per month is only $150 with most banks. The moment you only have 10% deposit, unless if it's a kind of order type loan, you actually need a lot more UMI, something like $1,400 or $1,800 with other banks. Anywho, so approximate lending capabilities for this couple is $836,000. Mary asked the question, very valid, hey, what if we don't actually get boarders straight away, or what if we decide not to get boarders or flatmates? Is this going to affect our lending ability? Short answer is yes. I'm taking off this boarder income in this scenario. Wow, look at that. The maximum lending is only $680,000. So it makes quite a big difference. Makes a massive difference. What if we had three boarders paying $350 per week? Yeah, you could input that into the calculator technically. Yes, it would give you a very impressive figure, but it would be a false positive. This is actually outside of policy. No bank will use three boarders, $350 per week as an example, unfortunately. So you do need a bit of a helping hand to really, really drive this. But for a real plain, simple, what I would probably view as a plain, simple application, mum, dad, two kids getting into their first home, then yeah, I'm sure you'll be able to work this out. But guys, more than happy. I would love to discuss your very own borrowing summary for you and just show you exactly what it can do. Otherwise, have fun playing around with this, and we will chat soon. Bye for now.